Hello and good day. This is the weekly analysis for the U.S. oil and natural gas USD, dated January 4th. On the last trading day, the price of oil closed with a doji candlestick. It managed to absorb the previous day's sell-side liquidity and ultimately formed a new sell-side liquidity at the edge of the daily order block. Based on fundamental news, with the arrest of Nicolos Maduro, the market is repricing geopolitical risk, which could affect the market in the coming week. This could cause volatility and may lead to a short-term price correction. It could collect liquidity on the sell side here and then enter a bullish phase to gather liquidity on the buy side. And ultimately, it may react to this daily order block zone. If geopolitical risk continues to increase, we could see higher price levels in the market, which could also collect liquidity on the buy side in this area. And ultimately, it may react to the BPR zone or the daily order block here. Also, by analyzing funds and hedge funds, they can adjust the total energy sector exposure. Not only gas, but gas futures are also being rebalanced by analyzing the open interest on the 4-hour time frame. We can see that the price of oil is in an order block zone. It had a short-term reaction to the bearish order block and is expected to continue the downward trend itself. Keep going until it collects the liquidity on the sell side here, and we can look for opportunities in the order block zone. On the daily time frame, which aligns with the 4-hour chart, we should look for a market entry position, especially if it's accompanied by bullish momentum and displacement. It could see higher prices, which might reach the order block zone at level 4 in this section, or possibly, after collecting buy-side liquidity, enter the order block zone. On the daily time frame, this could align with level 4 in this section. It could react. We can also see this on the 1-hour time frame. The price has formed a sell-side liquidity here and is currently in a bullish phase. It could reach this BPR zone. Here, it might react, or with increased momentum, it could enter the 4-level order block zone. Eventually, it could enter a bearish phase, where we can look for a buy position within the optimized daily order block, which is a 4 and single level zone. We should be looking for a buy position inside the market. In the case of NATGAS UST, we can see that the price of gas had a short-term correction toward the unicorn zone in this section, collected the buy-side liquidity, and then entered a bearish phase. In this section, we can see a gap that, due to geopolitical events, could increase market volatility, which might lead to a short-term correction, push the price upward, and enter this inefficiency zone. This would both balance out the gap area and the inefficiency zone, and after that, it could continue its downward trend. Also, with increased momentum and higher liquidity in the market, breaking through the unicorn zone could push it into a bullish phase. The bearish outlook is stronger in the market, and with increased bearish momentum, if the price closes below this BP area, the weekly level which has been refined to a Bailey one, it could enter a bearish phase and eventually react to this daily order block zone. By analyzing the 4-hour time frame, we can see that the price here, by collecting liquidity towards the buy side, reacting to the FWG zone, has formed a swing failure pattern trading strategy here, which with the downward price movement, and by reacting to this 4-hour order block and forming this gap in this area, we can predict the bullish market. It might have a short-term correction to the BPR zone or, with increased momentum, in this area, react to this order block and then enter a bearish phase. So we can look for a sell position in this zone within the market, targeting the order block zone or the unicorn level. In this part, even on the 1-hour time frame, the price has formed a sell-side liquidity here. And finally, it has reacted to the 1-hour unicorn zone here, which, if liquidity and selling pressure increase in the market, could push liquidity toward the sell side. Here, it could collect liquidity up to the 4-hour order block zone, which has been refined to the 1-hour time frame. It could react there, and after that, enter a bullish phase and eventually reach the BP zone. The 4-hour AR zone, which has been refined to the 1-hour time frame, could be reached, and we can set our target here. However, if momentum increases, the price could continue its trend. It could continue its bullish move, and in this section, we can look for a sell position targeting the sell side liquidity here. Wishing you success and profits.